Hi, good day to all. Welcome to a brand new trading week ahead for the week of 20th of Sep to 24th of September. So, as usual, I will cover the key technical trend bias for the following major stock indices across the globe: the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, as well as the German 30 index. So, before we start, let's take a look at the disclaimer slides first. All right. So, yep, as usual, I will flash you all the raw momentum table of last week performance. So, as you all know that last week we have a pretty interesting down day on the S&P 500. In fact, it actually impact the majority of the US benchmark stock indices, except for the Russell 2000, which managed to actually inch up a slight gain. So the Dow Jones, the Nasdaq 100, and the SPX 500 all actually declined, and especially the S&P 500 inch below the 50-day moving average very slightly. So, but however, later I'll share with you all why I do have a kind of an opinion that it may not be so potentially bearish on last Friday price action. So as you all know that this week itself is also pretty much pivotal. Why? Because we have key central banks meeting. Later I'll flash you all the calendar for this week, the key events to look out for or the key data releases. We have the Fed, we have the Bank of England, and as well as BOJ. So most importantly, market traders or watchers will start to focus on the Federal Reserve FOMC stance, especially since Jackson Hole a couple of weeks ago, Powell, the central banker of the Fed, the Federal Reserve, a chairman, has indicated that the Fed more likely, or I would say that it's likely to actually start quantitative tightening, or I would say that a reduction of the current purchase of 120 billion bonds per month as conducted by the Fed to kickstart before this year end. Okay, so this that has already been priced into the market. So what has not been priced into the market yet is how aggressive are the Fed willing to kickstart the first interest rate hike cycle. That's more important. Okay, that's actually an important portion. Why? Because if you really kickstart the interest rate hike cycle, that could actually tighten liquidity condition much more severely compared to a quantitative tightening. That means a reduction in the purchase of bonds. So if we were to look at the the Federal Reserve Fed Funds futures market, as indicated by the CME Fed Watch tool, uh, it has a higher probability that the first rate hike will come either in third quarter or fourth quarter of next year. So that's what the market is being priced into. So what we could see over here is that if the Fed starts to actually change or adjust market expectation to sound more hawkish in this week coming Federal Reserve meeting, or that could actually change the pendulum. All right. So, and also another key event to take note will be Evergrande. Evergrande is actually this indebted Chinese major property developer that has really been in a kind of a debt crisis mode since late last year. Except that this coming week they have a bunch of coupon payment from their bonds that is due, that is outstanding. So market watchers or traders will be seeing how will the regulator react to this current situation right now. Will there be a kind of a sudden help, or will there be a kind of a subdue restructuring that's going on to actually help Evergrande to actually negate its current cash crunch at the moment. Okay, so that is these two market factors, or these two related factors that is actually impacting the market right now. So in fact, it actually caused a bit of negative movement in today's Asia session as I talk to you all. Okay, so right now the S&P performance. Oops, sorry about that. Let's go back again. The S&P performance last week, we could see that it's came down again as well, but the magnitude of the fall is lesser than the prior week. All right, so negative 0.67 or negative 0.57% for the S&P 500. Then you have the Nasdaq 100 at negative 0.7%. Then almost unchanged for the Dow Jones Industrial Average. So quite surprisingly, the small caps managed to inch up a small gain of 0.42%. All right. Then if we were to look at the difference, means the prior the momentum, I would say it's more like a rate of change between last week performance versus its prior four week average. We start to see the S&P and the Nasdaq 100 starts to turn slightly negative, whereas the Dow Jones and Russell remains in the positive territory. So still not that bad. Okay, if you look at the from a kind of a average perspective in terms of smoothing market smooth, because as you know that why sometimes we need this kind of smoothing method in the market is because to take out of outliers or what you call it 1 to 2 days of sudden movement that doesn't actually help us to get a clearer picture of the trend bias. So but what's interesting definitely will be the Hang Seng Index and the Hang Seng Tech Index. These are the China related stocks. So definitely the current last week pretty much a severe negative movement is actually being caused or triggered by this evergreen debt crisis that is still pretty much on the horizon on the markets right now, especially related to the China stock market, which is eventually have an impact on the Hang Seng Index and the Hang Seng Tech Index. Then you have the Nikkei 225, pretty much subdued movement last week at 0.39%. Later I'll share with you a recap on Nikkei 225 movement. So we did mention that a couple of weeks ago, the very steep up move about close to about 7 to 10% from its key long-term support. It's been overstretched where we may start to see a due of a corrective pullback to actually retrace this steep up movement that was seen around 3 weeks ago. So it's indeed start to happen already based on its latest price action. So you have, yeah, so pretty much subdued movement as well, based on the kind of a simple rate of change between a momentum a factor, taking the difference of its last week's performance versus the minus the prior 4 week average. You start to see a significant change of negative 1.75%. Okay, then definitely you have the German DAX is last week it dropped negative 0.77%. So if you look at the rate of change versus its last week performance versus the prior 4 week average, is almost unchanged at negative 0.19%. But due to some, I would say that relatively, no, say specific factors that is related to the German DAX. So today you see a rebalancing of the DAX. So DAX itself has 30 component stocks. So right now it has 10 added component stocks. So I did read about an article about why they actually wanted to actually add these 10 component stocks and what these 10 component stocks are. So usually right where there will be a bit of a kind of a profit taking around this kind of adjustment period. And also don't forget on top of that we have a key event risk that is coming across the horizon for this week for that is specific for the European markets, especially the German market, will be the German federal election. So the election will be held this coming Sunday. So definitely with this event risk on the horizon, then coupled with other factors that externally that could actually have an impact on DAX as well will be the Federal Reserve FOMC meeting. So couple of these two events, perhaps we do potentially see less aggressive bullish stance adopted by traders on the German DAX for this week. Right. So I will share with you all the trend bias on and key levels to watch for the German DAX when I show you all this latest technical chart. Okay, so now before we go into the chart again, uh, this is the weekly performance of the sectors. Okay, so comparatively to the prior week where we see a sea of red. So last week, right, we managed to see a bit of gains for two sectors only. The energy, which is plus 3%, due to actually it's actually kind of being rescued due to last week kind of a superb performance by WTI crude oil that is pulling up the energy stocks as well. So that's pretty much a correlated player with oil. Then you have the consumer discretionary at 0.5%. So the weakest will be the industrial negative 1.56%, the utilities negative 3%, followed by the materials at negative 3% as well, 3.2%, pardon me. So what we could see over here is there's no clear signs of neither too bullish or neither very, very bearish. So but we start to see this kind of softening stance, especially for the month of September. So previously I did highlight that the month of September tends to be the weakest month for the entire year for the S&P 500 based on seasonality behavior. So this kind of seasonality is very strange. It tends to actually play out year over year again. So what we could see is that potentially it could start to see this kind of seasonality omen that is being reflected in the market. So then on top of that, don't forget that we right now, I also mentioned previously in my tweet or in my some of my outlook that the peak growth narrative has started to actually intensify. Why? Because we start to see lots of key economic growth indicator, like for example, U.S. Consumer sentiment, which is released last Friday, has started going to tick downwards. Then you start to see manufacturing PMI and services PMI almost across the globe is pretty much subdued. But however, inflation continues to be on the high side. So that could be what I call a sign of number one. We may be coming close to a period of lackluster growth, followed by higher cost of doing business for the businesses and higher cost of consumption inputs. That means the consumer will start to pay more for their daily necessities. So that actually don't actually bode well for global economic growth. So what you see right now is that this is kind of being a fit into the global stock market at this moment in time. So we have this kind of hesitant mover between the bulls and the bears. All right, so now let's go to the technical chart then. All right, so before we go to the technical chart, I want to highlight to you all that I do have a Twitter account. So this Twitter account, right, do follow. Why? Because I actually do live update. I mean, what I mean by live update is if we start to see anything interesting on the market, I will actually broadcast it to my Twitter account first because it's much faster and it's much more digestible in terms of bit-sized news rather than writing a long form of article. So my Twitter account is just open a Twitter account. It's free. Go www.twitter.com, open an account. Then once you create an account, right, you just click my name, just keep my name at Kelvin SC Wong. Just follow this. So last weekend, actually, I did highlight that why do I think that the break below the key support, the key 50-day MA, which is 4436, S&P actually closed at 4433 on last Friday. Why I do not think that it's so bearish because of this option quadruple reaching on Friday itself that actually distorted the picture. So you can actually read my reason behind it. It's pretty much detailed. So I would not want to go through again. So as written on Twitter. So do follow me on Twitter. And you're able to read my latest live musing updates on the markets. Okay, now back to the technical chart that I want to share with you all. Okay, so as usual, before I jump into the technical chart, right, I will look at some risk proxy, right, that give me a gauge about the global market or even the US market. So this one in Twitter over here, I highlighted the junk bonds, which is one of the risk proxy that I use to gauge, all right, rather than looking solely at the stock market, okay, to have a kind of a confirmation bias. So the other one risk proxy that I like to gauge is the SOX, which is the semiconductor index. So semiconductor, right, is actually a key component industry in the global economy right now. So if we start to see semiconductor stocks, right, that is on the uptrend, it actually kind of imply indirectly that there is still growth in the global economy going forward. I mean, people are still pretty much rosy. I mean, there's still demand that is required for semiconductor chips or anything that's related to semiconductor chips to actually run global businesses. Because as you all know that right now we are in a high technology age, everything requires semiconductor chip. Your handphone, your games, even your electronic vehicle car, they all require chips to run. So if there's a demand of chips, okay, be it a demand shock or supply shock, but right now it's more like due to supply shock issue rather than demand shock issue, it will still kind of a react to a positive sentiment that can actually create a potential feedback loop into other risk asset classes like stocks. All right, for example, like stocks. So if we look at this particular technical analysis on the Philadelphia Semiconductor Stocks ETF, so it's like a basket of stocks, big semiconductor stock listed on the US stock exchange. So as you could see, right, last week performance, right, it's pretty much sideways. Nothing too toppish or too scary about. It's pretty much sideways. Still holding above the 100-day SMA, the 100-day moving average, and also this ascending channel support that is in place since 28th of October 2020 low at 44970. So what do we see over here is more of a sideways movement for whole of last week. So rather than any signs of a potential bearish reversal top that has started to form. So overall, right, in terms of sentiment wise, we hasn't really see a clear signs of a bearish reversal yet on the semiconductor ETF, which translate imply to saying that the risk on mentality may be still lingering around. Okay, rather than we start to see a kind of a major risk off, because this particular risk on proxy has a kind of bearish confirmation yet. Put it in simple terms. All right. So now going to the SPX 500. So this is what I mean. Still call that the 50-day MA. So the 50-day MA, right? Previously in the two occasion on 19th of August and 20th of July, it managed to test and ship a rebound. And right now, it has really broken below it on Friday, and especially during Asia session now, it's really break below as well. So what we could see over here is in fact starts to breach below the 50-day MA. But bear in mind that over here is that last Friday move could be a bit abnormal due to this option expiry, the mega option expiry that could see a bit of a distortion that is being caused by tremendous amount of option hedges, pardon me, as well as option dealers activity. Okay, so then nevertheless, we still got to watch a key level to watch. Okay, so the 4380 is still our key support level that we've been highlighting since 2 weeks ago. So this key level must hold in order for us, right, to see another potential upleg to test this 4630. Still recall last week that we are still looking for a push to test 4630 before we start to see a potential kind of a multi-week corrective decline to end that wave three. So yeah, the support still holds because so right now I got two choices. Either I turn neutral, with neutral with a view, or with a maintain a bullish view, but I need to have a potential upside trigger to reinforce my view. All right. So given that this week itself is pretty key because we have a couple of key risk event that is happening in the marketplace. So definitely I need to have a key trigger level for me to actually kind of further reinforce my bullish bias on this S&P 500. So, but before I can do that, I need to look at the technical elements first. Whether does it justify for me to do so? Okay. So if you look at the technical elements, right? Yes, the RSI has already starts to come down. The daily RSI, indicating to us that hey, it's now coming close to a key support level, key corresponding support level, which is around at the 38% level, all right, that manages to actually shape a bounce on the price action on the 13th of May, right, 5th of March this year, and as well as 29th of January this year, okay, in conjunction. So in conjunction, it comes down to a key support level that manages to see potential upside reversal in price action in the past. Okay, 4th March, 1st of February, and quite closely the most recent one on 18th of June. So it comes to a key support level really. In correspondent, your price action also at 43.30. So with that in mind, right, I could not validate a bearish move. So technical elements are still indicating to us that hey, this price is on support level, but whether how strong at this support level, can it bounce? Potentially, right? I got to look at shorter term indicators to indicate whether is this down move here is kind of overstretched. Means the down move from 16th of Feb late last week has it been overstretched, so that we could see a potential rebound in price action. So this is where I drill down to the 4-hour chart. So if you go down to the 4-hour chart over here, what we could see is that hey, the RSI now is actually at the extreme, coming close to the oversold region. In fact, it's already in the oversold region. All right. So being at the oversold region, what it means that it indicates us that last Friday's push down is kind of overstretched, where there is a risk saying that hey, it may capitulate for the bears. Okay, that means that is what I call an overstretched decline, which means given the overstretched decline, potentially there could be a reversal, at least a medium term mean reversal or rebound. So, but with this ongoing risk event that's being seen in the marketplace right now with Fed, as well as this Evergrande, uh, this debt crisis that is still looming in the marketplace with no clear signs of how the Chinese regulator wants to actually restructure its debt. All right, there's no clear indication of how they want to restructure it because there's no indication of a direct bailout. There's no indication of another state fund or another state-owned enterprise to take over the debts of Evergrande. Because for now, there's no clear indication yet from the regulators of what do they want to direct in terms of its restructuring process. So with that, right, I would have a key trigger level or key upside trigger level for it. In order for it to break up, that means it needs to have a clear breakup above 4487 to reinforce the view, the what you call it, the last push, the last impulsive up move view towards 4540. Then above it, you see 4630/60. So that's the view that we have earlier on. So the only thing that changes is I added in the upside trigger level, which is 4487, okay, to reinforce the view. That means, i.e., price action got to break above this level to actually give an additional importance or additional push for this potential upside to materialize. So, but nevertheless, if we see a daily close below 4380, all cuts are off. So this is where we start to see the start of that multi-month or multi-week up first or multi-week first, a multi-week bearish move to actually see a further slide towards the next support at 4235. Okay. So now the Nasdaq 100. So if you look at the Nasdaq 100 on the daily chart, this one is much more strong because it's still going to hold above the 50-day MA, all right, which is at 15,140. So same as well for the daily RSI is also coming very close to key support level at the 39% level and the 34% level. All right, so coming very close to this key support level as well. Then what's difference over here is on the Nasdaq 100 is I would actually also add this key upside trigger level, which is at 15,525. So the 15,140 as the key medium-term pivotal support remains unchanged. So what we are seeing right now is you need to have a clear bullish breakout above 15,525 to kind of reinforce that last potential push up towards 15,700 and thereafter 15,990/16,090 before we start to see the start of a potential multi-week corrective decline. Then, but however, a daily close below 15,140, that will actually invalidate everything. This is where we start to see the start of this multi-week or multi-week corrective down move to actually test or retest or target the next support level at 14,780/14,500. Okay, then moving on to the Hong Kong. So this Hong Kong, the highlight to you is yes, at this moment in time, right, it's actually testing, or in fact, this morning, right, actually, so far it actually ran close down to 3.5%. So low level, the lowest level for today's low is 23,846. Okay, so which is breach below the 24,000 key psychological level. And even though it's a key psychological level, why this level is important? Because it's actually the ascending trend line support, okay, that managed to help previous sell off, help previous sell off. That means if you look at previously, this one it tested, but didn't have a weekly close below it, which is on the March last year low, induced by the global pandemic crisis. This where when COVID-19 start to spread the first time globally. So it's actually the long-term circular ascending trend line that was drawn from the October 2008 swing low. So if you remember that this October 2008 swing low, how does this swing low happen? It's actually caused by the sell-off by the triggered by Lehman Brothers, which is the great financial crisis. Okay, then after that low, price action going to inch higher and didn't break below this ascending trend line support. So hence, psychologically and technically, it's an important level for watch in terms of a change in sentiment. So right now, it's actually testing at this level. Okay, so until we got to see how okay, most important is it tests this level in concurrent with key event risk that's on the horizon, which is the China debt crisis induced by Evergrande. Okay, the China property developer debt crisis. So it coincides with a key event and coincide with a key technical level. So definitely, whatever price action that happens after next, it will have a potential movement that could impact future price action. Okay, I got to make myself clear. I cannot forecast whether price action can accurately whether it will go up or go down from here. But what I can tell you is it's a key level, a key technical level, coupled with key event risk that's on the horizon. Means two things happen at the same time, which is the China property developer Evergrande debt crisis. So what happened to the price action after this. That means if the price action start to shape a bullish reversal candlestick, the tendency for it to impact future positive prices will be greater in terms of probability due to the significance of this level. If price action has a daily weekly close below this key support level, means close below 24,000 level, future negative price action in terms of probability again will have a significant down move, okay, based on the increased probability as well, okay, due to the significant level of 24,000. So this is something that I can share with you, okay, why this level is important going forward. So having said that, right, since this level is being tested right at this moment in time on a shorter term basis, that means we're talking about on a multi-week basis for this week, right, I cannot be so outright bearish, all right, because since this is testing this level, and I also cannot be so outright bullish because at this point in time, there is not enough element to say that, hey, this is a bullish, a bullish reversal candle may have formed because till now there's no bullish reversal candle yet, as seen on the price action, or any bullish divergence on the 4-hour RSI. So 4-hour RSI, what you see is similar low, but it's now testing at the extreme oversold level of 23%, 18% based on the past price action where the current corrective decline that has taken shape since 18th of Feb high this year. So right now it already hit the lowest, close to the lowest level of oversold region since the corrective decline started on 18th Feb 2021 high. Okay, so what we could do over here is that it's only at extreme oversold level, but there's no clear signs of a bullish reversal in terms, pardon me, in terms of bullish divergence or a particular bullish candlestick. It hasn't formed yet. So what I could do is that I got to turn neutral now to respect the 24,000 level, neutral between 23,500 and 24,750. So if we start to see a 4-hour close above 24,750, then I could start to validate a move back towards this previous range resistance at 26,750 and 27,100 level. But if we still a 4-hour close below, we will start to see a further decline towards the next FIBO expansion level at 22,090, 21,755. Okay, so that I have for the levels to watch right for now. Okay, for the Hang Seng index, the Hong Kong 50 index. Now, moving on next to the other Asia indices will be the Japan 225, or we call it the Nikkei 225, based in the markets. Okay, so if we recall right, the Japan 225 last week, we did mention that hitting this level, which is close to about 13-year high, which is also the 16 Feb 21 high, which is 30,716, we may start to see a pullback, okay, because price action has been overstretched and that pullback indeed take shape after this bullish breakout of 28860. So what we could see right now over here is, and then in fact the RSI already hit the kind of a extreme overbought level very closely and now starts to retrace as well and back below the overbought region. So potentially what we could see over here is that this retracement is still in progress to actually retest this breakout level. Now turns into a pullback support at 28,860 and also the 200-day moving average. So what we have right last week is yeah, we are drawn your there's this, why is it bullish because of this bearish ascent, why is it bearish in the short term because of this bearish ascending wedge configuration. So now last week I really it has broken down below it and retests its resistance and now starts to inch lower in today's in today's session. Bear in mind that the cash market, right, the Japan cash market is actually closed today. So what you see right now, right, the price action is still live because Globex, right, CME is still quoting the futures market. So we still have prices that is still trading based on the futures market right now instead of the cash market because the cash market is closed for today. So what with that said, right, I will not because it did actually fall down too much today's price action. So I will still remains the 30,716, the 30,716, which was last week medium term pivotal resistance. That level remains for this week. So what I added on is another support level after hitting 26,000 29,600 slash 460. So that was the support level that we have for last week. if it starts to break down below it, it may actually eventually hit down to the next support level at 28,660, which is so the pullback support level of the previous we call it a previous breakout zone, and also the very close to the 50% retracement of this steep up move from 20th August low all the way up to 1st September high. Okay, at the 50% level. So all in all, no change. Still remain the bearish bias to play this retracement move, to retrace this steep up move. Except that I added in a new support level is if a break below 29,460 may expose this index to a further drop towards 28,860 potentially. So, however, if you have a daily close above 30,716, right, all bets are off for the bearish side. This is where we start to see the start of another impulsive upleg again to target the next resistance at 31,680. Okay, now to the German 30 index. So I did mention earlier that the German 30 index, this week itself, right, it may be forming its own price movement rather than going in line with the external movement of other major indices. Because firstly, is today we will start to see a rebalancing of the German DAX index to include in 10 new members, so that could create a bit of volatility in the price action of the index, and as well as event risk again in the what you call it a country specific event risk, which is only applicable to the German market. More pronounced or more sensitively is the German federal election to be held this coming Sunday. So with that, right, it could actually induce a bit of volatility this week on the negative side rather than the positive side. So what we could see over here is that right now the price action is actually breaking below the 100-day moving average. All right, 100-day moving average. And also last week, right, we have a key support level at the 15,450 level, which has really been broken down right now to this price action. And with that in mind, right, if you look at the RSI also inching downwards, haven't really tested the oversold level yet. So what we could see over here is that it could actually come close to actually test the extreme oversold level here. Previously, that was seen on 28th of October. Okay, and definitely the March level, okay, between this zone at 24,000 and 20,000. Okay, so it has still a bit of room down towards this downside before hitting this extreme oversold limit. So with that in mind, right, that means i.e. downside momentum seems not to be overstretched from a medium term perspective if I look at the daily RSI. So given that the bearish breakdown of last week resistance, the key medium term pivotal support I share with you is the 15,450 level. Yeah, 15,450 level. Okay, 15,420. Okay, 15,420, it broke below it. So what you could see right now, right, is a further down move to go down towards the next support level at 15,050, then thereafter followed by 14,800. So 14,800 is pretty key level to watch. Is why? Because 14,800 actually coincide closely with the 200-day moving average, which is this orange line over here, that the price action managed to actually help above it since the challenge of it on 30th of October, and it managed to close at 4th of November. So since 4th of November, that's closed more than that's coming close to the 10 month period already, that or part of it 9-month period, that it hasn't closed below this 200-day moving average. Okay, so definitely this is a key level to actually highlight on, which is at 14,800. So, and also corresponding to the swing low of 14th of May, 4th of May as well. So with that in mind, right, we are looking to see a kind of a push down due to internal factors potentially to test these two 15,050 and 14,480 support level, as long as 15,770 key medium term pivotal resistance that are set for this week didn't break above, that means it didn't have a daily close above it. So however, if we start to shape a daily close above it, I mean, that's where we start to see another choppy move on the upside instead. So we will start to see a squeeze up to test the recent 13th August swing high area, the all-time high area, which is at 16,070 slash 16,200, which is very close to the all-time high. So this is the next resistance zone to watch. If price action have a daily close above 15,770, which invalidate our bearish drop view towards the key support of the 200-day moving average at 14,800. Okay, so with that in mind, thank you for your time. I hope that you actually enjoyed listening to my webinar so far. And do take note that do follow me on Twitter to actually stay abreast or keep updated with the latest happenings in the markets. So with that, have a great trading week ahead, and I see you all again in my next video.